Hello, and welcome to this video that will talk about the tax benefits related to your MBA education. In other words, can you use some tax benefits to help pay for your education if you are a fully employed or executive MBA program student? I'm Gonzalo Freixas. I'm a faculty member here at the UCLA Anderson School, where I teach a course in taxation. And because of the changes under the Tax Cuts and Jobs Act of 2017, I would like to go over what benefits still exist and which ones have been eliminated so that you know how to best approach paying for your MBA education. So let's get started. But first, the disclosures. This is just a video to provide a general information to you about your tax rights under the existing tax laws. But of course, every student's circumstances are different. A lot of things will depend on what your job is, your job history. You should consult definitely with your accountant, lawyer, or tax advisor before you make any final decision about using some of these tax benefits, and understand that the rules have changed under the Tax Cuts and Jobs Act of 2017. All right, so let's go over a little bit of sort of where we are and where we were so that you can understand where we are. So I'm going to have some slides now in this video that will go over some of the deductions and tax benefits that have existed or still exist. And what I've done is, if there's a red X, it means that the tax benefit was eliminated by the Tax Cuts and Jobs Act of 2017. So what that means is, starting in calendar year 2018, the new law applies. So anything with a red X is no longer the law and is no longer available to MBA students. However, if there's a green check mark, that's a good thing. That means that the Tax Cuts and Jobs Act of 2017, which I will start calling the TCJA for short, or as they call it in tax parlance, TICJA. So the green check mark means we're still good and you can still do this. So let's talk about it a little bit. So first of all, there used to be tax savings for employed FEMBA and EMBA students. No longer, that's gone. So if you're working for somebody else, you have no self-employment income and no reimbursement from work, there are no tax benefits for you. I'm sorry. That is just something that the Congress thought should be eliminated, and they did. However, if you're a FEMBA student, or an EMBA student for that matter, and you are self-employed, what that means is you have some self-employment income from a business, not from a real estate investment, because real estate investing by itself, unless that's your day job, isn't a business according to the tax case decisions. But any other kind of self-employment income, any other kind of 1099 income that you or your spouse, if you're married, might have, as long as you participate in the management of the business of your spouse, then you do fully benefit from this deduction, and that was not changed. Notice the green check mark. And this is just a rough example. Let's assume we have a FEMBA student, does not own a home. This FEMBA student is married but has no children. The student's salary is $90,000 and their spouse's salary is $50,000, total of $140,000. And it is the second year of their MBA, so they've paid $42,000 in MBA tuition that year. Well, from taking this deduction, you'll get back an additional $8,500 to $10,000 roughly in tax savings just for that calendar year. So if you multiply that out times multiple years, you can see how you can get significant tax benefits because you are running a business and you qualify, and we'll talk a little bit more about this later. Well, what about the executive MBA students? Well, again, if you are an employed executive MBA student with no self-employment income and no reimbursement from work for your MBA tuition, there's no benefits for you. Sorry, TICJA eliminated that. However, if you are a self-employed EMBA student who has 1099 income or has their own business or helps their spouse who has their own business run that business, And in this example I've given you, we have an MBA student that owns a home, so they're getting some deductions for interest and taxes, married with one child. And we assume the student is making $180,000 in this example, and the spouse is making $60,000 for a total of $240,000. Assuming you pay $75,000 in the calendar year, which would be a little under half of your MBA tuition, you're going to get back $18,000 to $21,000 from the government. And that means that's a significant savings. And if you have self-employment income, this deduction does not get affected at all by the AMT, or the alternative minimum tax. So that just gives you an example. And again, things differ depending on your particular situation. This is just a rough estimate, but it gives you an idea of the potential. So let's take a look at how this works in terms of computing your taxes. This is the basic formula of how you compute your taxes on your tax form. And basically, you start with gross income, and those are things that are potentially taxable income. So for example, things like your salary, dividends, interest, those all get taxed. And so that's gross income. It goes on the form. However, things that are not considered gross income under the tax code, like municipal bond interest, life insurance benefits, work-related benefits that are like your company is paying for your health insurance, that doesn't count as gross income. It doesn't go on your tax form. And as we're going to find out in a little while, certain kinds of educational benefits or reimbursements don't count as gross income, and that's a good thing for you. From that gross income, to compute your tax, we start taking deductions. The first of those deductions are the deductions on page 1 of your 1040 form, and those are what we call 4 AGI deductions. AGI in this case stands for adjusted gross income. Basically, there's some deductions you can use to reduce gross income to adjusted gross income. That's the number that appears on the bottom right-hand corner of your 1040 form. Included in those would be things like, under the old law, moving expenses and alimony payments. No longer. Those are gone too. But one key thing that is still there are losses from a business. So if you file a Schedule C and you have your own business or 1099 income, and let's say last year you had, or in 2018, let's say, you had $20,000 in income and $40,000 in MBA deduction that's related that you could use, that's a $20,000 loss, and that is a 4 AGI deduction you can use to reduce your salary income or your spouse's salary income, for example. Then from that, you get you get your adjusted gross income, and we can now turn to the back of the 1040 form and look at from AGI deductions taken from your adjusted gross income. There's two options here. Most people are going to take a standard deduction, $12,000 for single, $24,000 for married filing jointly. But if your itemized deductions exceed those numbers, you would itemize instead. For example, if you own a home and you are deducting the interest on your mortgage, the property taxes on your home, if you have a lot of charitable contributions, you would take itemized deductions. In the old days, pre-TICJA, pre-2018, you could take your MBA expenses as an itemized deduction if you were employed. That is no longer available, but we'll see if there's anything else there. But I'll go over it a little bit with you. Then you calculate your taxable income after all those deductions. You multiply that times the tax rates, which now go from 10% to 37%, and you get your preliminary tax due. Now you can reduce that tax due with tax credits, and then it's increased by alternative minimum tax. Unfortunately, most FEMBAs and MBAs are not going to qualify for tax credits because you make too much money, but I'll talk briefly about those a little later. And that's it. That's how you compute your taxes. Now let's take a look at some of these particular items that still exist under the new tax law, and some briefly that are now gone. And we start with gross income exclusions. I like to say, don't count it, please, because anything that you receive in terms of money that doesn't count as gross income doesn't show up on the tax return, so it's tax-free money. Classic example, scholarships. They had talked about removing those. They didn't. So if you get scholarships or fellowships, you will still be able to take that tax-free as long as it pays for tuition, fees, and books, not for things like housing. I'll skip employer-paid education. If you had EE bonds, those are federal bonds, or an education or Coverdale IRA, individual retirement account, those to be used for education. If you use the principal and interest of that money towards your education, all of that interest gained is tax-free. And then the big one, the one that still exists under the new tax law, is employer-paid education. Now, for most people, the maximum that you can receive from your employer and not have it count as income on your W-2, if you're employed, is $5,250. That's the cap of what is not income to you as the employee, and that is the cap on the deduction by the employer. But guess what? Almost all FEMBA and EMBA students are not most taxpayers. Because for you, since we assume that most of you are doing some sort of management-related work, the MBA is related to your job. And because it's job-related education, all of it is tax-free. Let's talk about that a little more. So, I like to say, to fringe or not to fringe, the reason that you, as a FEMBA or EMBA student, can exclude all amounts paid by your employer, even those above $5,250, is if you can qualify that payment as something called a working condition fringe benefit. So let's say you got $10,000 from your employer, all $10,000 of that is tax-free. Translation for working condition fringe benefit is that the employee could have deducted it had he or she paid for it. And the two-pronged test for that deductibility is the education improves an existing job skill. Well, tax court cases have said that an MBA degree is a general management degree. The IRS is not allowed to look at, hey, you're in finance, marketing class doesn't count, or hey, you are in marketing and finance class doesn't count. All of the classes in your MBA count as excludable in this particular case. So if you're doing any kind of management, and that includes supervising people, if you're an engineer doing project management work, financial analysis, sales, strategy, all of those things are management. And therefore, the MBA degree improves the existing job skill for you. The second prong is that you're not using the education to prepare yourself for a completely new profession. So if you're an engineer and you want to become an investment banker, that is a change of career. The MBA, therefore, is not deductible if you're self-employed, and therefore amounts over $5,250 would be includable. However, that may not happen until after you get your MBA degree. And if we're looking at, let's say, your second year, for that tax year, if you had the same job the whole year, say doing some sort of management, and you got $10,000 from your employer for an MBA degree, it's related to your current job for that tax year, and all of it is excludable. It's under Treasury regulation that I cited there, and the good news for your employer is that the employer can also fully deduct the benefits, even amounts above $5,250. Now, sometimes if you work for a big company, like a IBM or a Disney, they might, as a cautionary measure, go ahead and put anything above $5,250 on your W-2. So what do you do there? Well, technically you qualify, but the company, well, what if the boss won't play ball? It's going on your W-2. So anything that you got that $10,000, $4,750 is going to go on your W-2, included for tuition reimbursement. Is there anything you can do to turn around and offset that W-2 income as a deduction? Because the law says you can. And I've cited for you a recent article that was written by a tax law blog that clearly lays out that we were worried about this one. We thought under the new Tax Cuts and Jobs Act they would not allow this anymore, but they still do. You can still offset the amount included in your W-2. So in my example, you got $10,000 from company X, your employer. they put $47.50 on your on your W-2 form as includable income and took taxes out for it. You can now turn around and file a Form 2106 and itemize your deductions like we talked about and offset that $47.50 and wipe it out as in terms of income for you. And that is still the law as far, well, in fact, the recent IRS publications have told us that. So that is a very good benefit for a reimbursement that you might get from your employer, and a good reason why you might want to negotiate as much reimbursement as you can get. All right, so let's talk about 4AGI deductions for self-employed FEMBAs and EMBAs. So this is for people that have 1099 income. You have your own business. You have not incorporated or formed an LLC. We'll talk about that in a minute. And you have some revenues from that company. Now, people sometimes ask me, well, what if I only did $1,000 worth of revenues consulting? Well, it's going to be not look really good for you if you have $1,000 worth of income and $75,000 worth of MBA education expenses. But what if it's $12,000 or $22,000 or $40,000? Well, then that's a legitimate business. And so the fact that you write off your MBA education and it creates a loss for your company, that's okay. That loss is a deduction for you off of your salary or your spouse's salary. So if you are self-employed, if you have any 1099 income, or your spouse, and you're filing jointly, has their own business, and you are involved in helping your spouse manage that business, and you should list yourself on the business and make sure you have documentation to show you're involved, then on your tax return, you can fully deduct all of your MBA as a business expense when you file your Schedule C, because it improves your existing job skill. You're managing a business. Duh, what could be more management? And of course, if you're running a business, you're not using the MBA to get a new job. And the nice news is here that you can make $2 million in that business and fully deduct your MBA because it's not affected by the alternative minimum tax. So, for those of you that are self-employed or have spouses with self-employment income, this can be a really good way to write off your MBA and save thousands of dollars in taxes. So what if you own an LLC or an S corporation? Well, that's okay, because the only thing about an LLC or an S corp is you have to have some documentation. You can have your accountant prepare that, where you have an educational assistance plan for employees, which includes you. And so, as long as you have that in place, you can qualify to fully write it off from your S Corp or LLC, even if it creates a loss. Once again, that loss can be a deduction. So be sure to check with your accountant about that. And that's it. That's how you can deduct your MBA for self-employment income. All right, now let's talk about the working person. If you are an employed MBA student, executive or fully employed MBA student, will you be able to take any more deductions for your MBA tuition and other related expenses? The answer is no, with a huge asterisk. You see, this expense is gone. It's gone for your federal income tax return because the Tax Cuts and Jobs Act of 2017, as I mentioned, eliminated the miscellaneous itemized deductions, which included unreimbursed employee expenses. So you can no longer do that. Self-employed people can still deduct it. Employed people cannot. But stop. What about California? If you are a California resident, you live and work in California, has California also mirrored or followed the federal government in eliminating these miscellaneous itemized or unreimbursed employee expense deductions? And if you don't live in California, when you hear about what California has done, you should check with your state to see what they have done or not done in terms of conforming the Tax Cuts and Jobs Act, the state tax code to the Tax Cuts and Jobs Act. And interestingly, usually California conforms whatever the feds do when it comes to tax returns. But they didn't. Because here's the deal. Before the Tax Cuts and Jobs Act of 2017, if you were an employed working professional MBA student, you could write off your entire MBA and all related expenses as a miscellaneous itemized deduction under a subcategory of that which was called unreimbursed employee expenses. To do that, you had to show a two-pronged test was met, which was really easy for most FEMBA or executive MBA students. You must improve an existing job skill. So if you have a skill related to your job, for example, you supervise people, you do financial analysis, you do marketing and sales, same things that we talked about for self-employed people, and you're not using the MBA to change careers, then you could fully deduct the MBA. Anything above 2% of your adjusted gross income. So if your adjusted gross income was $100,000, 2% of that would be $2,000, and so you could not deduct the first $2,000 of MBA tuition and expenses, but everything above that. However, this was wiped out by the Tax Cuts and Jobs Act at the federal level, but it appears, and this is still a little bit of a gray area, but it appears that this full deduction is still available for state of California income tax returns. And if you are in the tax income category of most of our working professional MBA students, that means if you're paying a full year of tuition in a given tax or calendar year, you could save or get a refund of between $2,000 and $6,000 in California taxes paid to help pay for your MBA. So that is still a significant benefit for our working professional students that are employed. Let's dig a little deeper so you have some things to cite to your tax preparer, which you should definitely consult with, because it's really only appears as one sentence in a 448-page document that the state of California produced. So this large 448-page document, or thereabouts, is called the State of California Franchise Tax Board Summary of Federal Income Tax Changes for 2017 Laws Affected. And basically, I've got the site for you here. There's really this one little paragraph that talks about miscellaneous itemized deductions. Ahead of that, it summarizes what those are and how the new Tax Cuts and Jobs Act of 2017 eliminated all of those. But then it shows the amended section of Revenue and Taxation Code Section 17076, which basically says that the California is not following suit and is not suspending those deductions, which means you should still be able to fully deduct your MBA if you are an employed person and your job involves some level of management. I'm just going to read it to you. Let's read it together to kind of make sense out of it. So here's what the section says. California conforms under the personal income tax law to the federal rules relating to miscellaneous itemized deductions under Internal Revenue Code Section 67. That's the section where this used to be allowed and is no longer. As of the specified date of January 1, 2015, which is when this thing was last modified before last year, with modifications, and here's the critical part, it is this last part of the sentence that is critical, but does not conform to the federal suspension of all miscellaneous itemized deductions. So what this seems to say is that these have not been wiped out at the state level. But we are not sure yet. There's nothing else that's been put out by the state about this other than this little paragraph. But it seems to be quite clear, and the experts that I have checked with in terms of CPAs and tax preparers seem to agree that it is something that a taxpayer can still deduct. So you have the site there, pass it along to your tax preparer, and it is a little ray of sunshine in this otherwise dark cloud that tried to eliminate your ability to deduct your MBA. However, if you are self-employed, you can deduct. And it's not just the tuition, it's everything. If you do a global immersion and study abroad, you can deduct all those expenses. If you fly down from the Bay Area or Seattle to come to our program, and you stay at a local hotel or Airbnb, you can deduct that. Your books, you need to buy a new laptop, because you're going to be doing all this studying, you can deduct that. Your mileage, if you're driving from work to UCLA, or your Uber from the airport when you come down from the Bay Area, all of these expenses reasonably related to the MBA, are fully deductible as a self-employed business expense. There used to be this case, Allemeyer, which allowed FEMBAs and MBAs to fully write off their MBA. I did have it there, but unfortunately the law has now changed. Allemeyer is no longer good law. What about tax credits? Remember I said once you compute your taxes, there are some education credits. There is the American Opportunity Tax Credit. Not going to talk about that because once you've completed 4 years of college, you don't qualify for that. However, many of you potentially could qualify for the Lifetime Learning Credit, which lets you wipe out $2,000 of taxes. I still think it's better to take a deduction, but you at least have this credit. The problem with the Lifetime Learning Credit is look at the phase out. It's gone if you make more than $67,000 in AGI. Filing single, or 130 for AGI filing married, and that says 2017 here, but it's 2017 or 2018. So there are tax credits. Most people don't qualify. However, be careful. If you do qualify for the tax credits, you can't take the credit and the deduction from self-employment income. That would be double dipping, and that's not allowed. What if you get audited? Everybody's all worried. Oh my goodness, your accountant tells you, oh, you shouldn't do this because if you have a $20,000 loss on your tax return, you'll get audited for sure. So what? This is not gray. It is black and white. You absolutely qualify if you're running a business to write off your MBA. You absolutely qualify if the MBA is job related and helps improve your job skills to exclude everything that you get from your employer. It is crystal clear. We have had 60 to 70 MBAs or FEMBAs get audited in the last 9 years, roughly, because it's probably a dozen a year, and they always write to me. And every single one won. Successfully defended the audit, paying zero taxes. And I have sample letters that they sent the IRS and Franchise Tax Board in case you get audited and you need some help. So, don't be afraid of an audit because you absolutely qualify for these things. So just to summarize, what changes did the Tax Cuts and Jobs Act of 2017 make for education? And based on those changes now, what should be your strategies to help pay for your education by taking advantage of tax benefits? All right, so let's go over what's gone. Because remember, the deduction for employed MBAs, FEMBAs and MBAs that have a job and get a regular W-2 and no self-employment income, the miscellaneous itemized deductions is gone, which means unreimbursed employee expenses like education, gone. The other thing is this flat $4,000 for AGI deduction. It was $4,000 in 2017, but that's been wiped out as well. However, we still have lots of good things left. We have the business education deduction that we've talked about, whether you're self-employed, have an LLC, S Corp, or partnership. We have the gross income exclusion, even amounts above $5,250. We have the scholarship exclusion if you get scholarship money. And for some people, we have the tax credits, although you are not likely to qualify for those. So what are your strategies? Well, because employed people can no longer deduct their MBA, there's really two things left. Negotiate with your employer to get more reimbursement, perhaps even in lieu of a salary increase. Next time you're going to talk salary with your employer, say, hey, guess what? Pay me 10 grand more in educational reimbursements. You'll get a deduction. You won't have to pay Social Security and unemployment and all that on that money. And I get more of my education covered with before tax dollars. Or you can pursue some self-employment activity or involvement. If you have a little side business you've been thinking about starting, maybe now is a good time to start that side business, as long as it's generating some revenues, and then you can completely wipe out those revenues and perhaps create a deductible loss for yourself from that self-employment activity. These are the only two things that we can do now, but they do leave you some options. And that's it. If you have further advice you need about it, we do have two people here at Anderson. Professor Tamara Burgess, who has her own CPA practice and teaches tax to our undergraduate students, and Jonathan Petard, who is a FEMBA class of 2019 member. Both of them are CPAs. They worked for major accounting firms, and they currently are partners in practices that they have. And they do dozens of tax returns for MBA students. UCLA Anderson does not endorse any particular CPA referral, but these are two people that you could consult to have your taxes done if you so need, because they're experts in MBA tax benefits. And that's it. If you have any questions, be sure to email me. And good luck with your tax filings, and hopefully you can still get some benefits for yourself to help offset the cost of your MBA education. Thank you so much.